And welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what we would expect to happen next. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. I'm going to be using Elliott wave theory and some smart money concepts in this video, so if you are looking for more information about these, then we are currently running 40% off our courses, which is linked in the description down below at 𝗕𝗘𝗪𝗏𝗀𝗀, so check that out. So let's jump right down into this one though. So Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. Following on from yesterday's video, as you can kind of see we're still trading sideways. Okay, this is basically between two key levels. The low level is 23,339, and on the higher side, it's 25,250. Okay, so we can see that we've been bouncing between these two levels. My expectation is that we do come down a little bit deeper. Okay, I'm looking for a low anywhere really in the range of 22,857 and 23,289. This area would be putting us in line with our 1-to-1 to the 1.236 fib levels, based on a three-wave structural point to the downside, which will complete this B wave. Once that is done, my expectations are that we do have a slightly higher move between 27,041 and 28,133. That would basically complete a zigzag pattern. Now, this is only one of several possible scenarios that are in play. Okay, there's no guarantee that this is something that is going on. This is something that would only occur if this is the beginning of a structural point here, and we've started with 5 waves. If you start with 5 waves, you must end in 5 waves, okay? However, it's also possible that this is an end of a structure to the upside at the 25,250, and it would be a flat corrective structure, in irregular flat at that, okay? So it's a bit difficult because there's multiple different ways that we could kind of look at the market right now for Bitcoin, that it could be this A, B, C irregular flat, or alternatively it is this A, B, C, and we're yet to kind of push up into those highs, $28,000. Okay, so both scenarios are true until one is proven false. Okay, so for an invalidation of the bullish scenario up to the 28,000, we would have to go down lower than 21,351. Okay, so if the price was to happen to come down and crash past those lows, then that basically means that we cannot have that $28,000 Bitcoin under this structure, okay? And it would mean that it was the irregular flat that was winning. Likewise, if we were to go up higher than $25,250, then that would also mean that the irregular flat is not the correct structure either, and in fact, it would be more likely to be this zigzag pattern with a 5 up, 3 down, 5 up. Because my expectation would be that we do have, from this low, a 5-wave structure take us up into that higher range of $28,000. Okay, so it would be 5, 3, 5. That would be kind of, you know, the scenario, and that would be more likely to occur if we get past $25,250. Okay, so knowing that we are essentially just in a ranging market, waiting for the market to decide which direction to go on, it would be incredibly high risk to be trading on BTC at the moment. This is kind of thing that you want to wait for. You want to wait to see whether or not you get confirmation of the direction, and then jump in from there. Now, that's the Elliott wave theory perspective on the market. Now, if I come on over, we can check out the smart money concepts approach to the market. Okay, now this would actually allow us to look at the thing, or to look at the market in a very similar way, but it might drive out slightly different results. So if we take a look at the smart money concepts, we can see the ranging market. This is identified also with our premium area at the top here, and our discounted area at the bottom here. Okay, we can see there's slightly different ranges, but you can kind of see that we're trading between these two areas. Okay, we had our low down here, and we have a double top right up here. Okay, so we know that we're in that ranging market, and we can see it there. Now, we can also see that there is this red area here, okay, and this green area down here. These are essentially order blocks. We have our sellers right here, okay, and we have our buyers down here. Our buyers are currently in the range of $23,500 to $23,700. $23,700. Our sellers are $24,800 through to about $25,100. So we know that actually, although we've got a premium area and we've got a discounted area in our range and market, the buyers and sellers are within the parameters, basically just above the discounted area or just below the premium area, meaning that they're trying to sell theirs before someone else does, likewise get in before the price hits those lows and just rockets, for example. So you can see that the psychology of how people are operating here is very much aligned to kind of a retail mentality. Now, Smart Money Concepts likes to keep track of where these order blocks are, likes to keep track of the institutional candle and the institutional money that comes in. When institutional money comes into the market, we get left behind these fair value gaps. Okay, you can see green ones and you can see red ones. The red ones are essentially where there was so much selling from an institutional or a big fund of some kind that it tanked the price and left an imbalance in the order books, as in there was nobody selling at this particular price when all that selling was occurring. So basically, there was no buyers, I should say, and there was no buyers here as people were selling, right? So as the institutional fund started selling off, there was nobody buying in this gap. This is an imbalance between the sell order book and the buy order book. Okay, now these imbalances tend to come back and get filled. Price loves to move back towards them, and the reason for this is quite a simple one, really. When an imbalance occurs, it basically prevents the institutional player or the big money, the big fund, to continue selling, in this case up here. Okay, so they have to ease off. They can't just continuously sell if there's no one willing to buy it from them. So they stop. Once this imbalance occurs, they stop. They start testing the market, manipulating it at times, seeing whether or not they can entice more buyers so that they can sell to them. And what you'll tend to find is that when they cool off, the buyers do come back in and they come back up to this imbalance. This imbalance is also called a fair value gap. We see this all the time, and price loves to come back down and get them filled out. Okay, some clear examples. If I come over to this part of the chart just over here, we can see that there was an imbalance right here. Okay, this institutional candle right here came in, pulled the price down, and you can see that there even was another institutional candle down here. And then, of course, when they realize that there's no one really buying from them, they kind of stop their selling, and the price naturally comes back up. Okay, and it filled the gap. In fact, it filled this one, and it filled the one just above. So if I were to draw these on, you can see that we had a fair value gap here, we had a fair value gap here, and we had a fair value gap right in here. Okay, and all of those got hit. They all got confirmed. They all got filled back up. Again, there's another one right in here, and you can see that one got filled, and so forth, right? So you can kind of see these things. Now, at the moment, we've got this one here kind of waiting to be filled. We've got this one waiting to be filled, and we've got this one waiting to be filled. Okay, so what are these things telling us? Well, essentially, it tells us that we are likely to come down into this range here and fill this one out. And we're likely to come down and fill this one out. And we're more than likely eventually going to come back and fill this one at the top as well. Okay, we don't tend to leave these things behind for too long. Sometimes they can be around for years, sometimes they can be around for months, and sometimes they get filled within the hour. Okay, so it's important that we kind of reflect on the scale of these things. Now, these are all on the hourly chart, so chances are that they will get filled reasonably quickly, but there are some, as you can kind of see from their legacy of Bitcoin here, that some that haven't been filled for quite some time, and so forth. Okay, so don't think of them as a guarantee that you always do this. They can take a very long time before price will go and respect them. Now, so the other thing that's kind of important to understand is that we have this this imbalance right here. Basically, institutional players were pushing the price up. We left the imbalance behind. This imbalance also happens to be on the equilibrium. Okay. Equilibrium is basically between the 50 or between the premium and the discount levels at around 50%. Okay, basically it means it's halfway between the two, and it's basically an area that price likes to obey. It likes to basically react to. Normally acts as support or acts as resistance, as you can kind of see over here, and currently where we are right now. So from a smart money concepts point of view, we can see that, okay, we're likely to kind of see if we can, come back down a little bit. We're testing the equilibrium. Chances are that we're probably going to fail it. Not only are we overbought on our stochastic RSI, but it doesn't look like we have to continue this move to the upside. So expect price to potentially come down and retest these lows and maybe even push up a little bit higher. Now, the thing with the market at the moment being incredibly difficult to get a good read on, we should acknowledge that it's also equally possible that we come up and just grab this gap that was left behind in this higher range, hit the sellers, and then tank all the way through and grab as much of that liquidity that is now present as possible. Okay, so just bear in mind that all things here from a smart money concepts point of view are possible. And the reason that I say it is possible is because we have got this minor change of character. Okay, so we were tracking down. Okay, we had a change of character. We had a break of structure here. These are all minor with dashed lines, and then we had another break of structure down here, and then we get this change of characteristic. So this was all down, this was kind of coming down into these low areas, and then we changed our characteristic as we started to go back up. That's pretty bullish. So it's possible that we do move up towards our imbalance slightly higher in the price chart before we get the ability to move on down. Okay, so we want to kind of reflect on the possibilities here, considering that smart money concepts here is telling us that we've had a change of characteristic with the price action, that we should really pay attention to that. Now, it's not a guarantee, because sometimes you get these change of characteristics, you push up a little bit, and then you still come on down quite heavily. Okay, but for the most part, the characteristic changes there. We've kind of gone past some key levels, and it's possible that we come up here into the range of sellers before we come down and fill out these fair value gaps down at the bottom. Okay, so from our Elliott Wave theory point of view, our expectation is to come straight down, but it is possible that we move up before we go down because, well, the market is the market right now, and it's incredibly manipulated in my humble opinion. So grabbing liquidity, as it would appear in the charts, seems to be the most probable and most likely scenario to kind of unfold. Essentially, we're in a ranging market. Would not encourage anyone to kind of trade it, but do bear in mind, I'm not a financial advisor. I cannot give you financial advice. All I can do is give my thoughts and opinions on the data in the charts. Whilst we're in a ranging market, there is no point in trading, and we might as well just wait for confirmation of the direction at a bigger scale, rather than trying to worry about all the micro movements that are going on. So essentially, I would be personally waiting to see how this kind of plays out, whether we do push up and move back down, and whether or not we get a break out of our ranging market before we actually get the bigger moves. That's either up towards our 27-28K or down into the price action towards more the 21 area. So I'm going to leave the video right there. Just a brief update on BTC. I'll do a bit more of an in-depth analysis on the on-chain data this afternoon, so do watch out for that one. Other than that, guys, if you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one, though, guys, have a fantastic day.